Hey everybody, this is Rob Keens of goldsilverpros.com. I'm here with Keith Neumeyer, who's the founder and chairman of First Mining Gold. Keith, how are you doing today?
Great, Robert. Nice chatting. Nice to get this week behind us. It's been a little bit of a crazy week.
It has been. We had the options expiry, as we were talking about before the call, and how that affects the commodities complex. Of course, the precious metals, gold and silver. And then also June tends to be a bit of a weak month. Maybe you can tell us about what your thoughts are on that.
Yeah, it's interesting because if you go back and look at the 30-day chart or the 30-year chart and look at each month and how metals trade, gold and silver predominantly, you'll find that October through February is generally a pretty strong period for gold prices, and May through July are really your weakest periods. So we just got to get through the summer here, and I'm sure this bull market that we're well into at least a couple of years of this bull market, which I think is going to go on for another several years. But nothing goes straight up, and this is just a pause, and what's going to be, I think, much higher prices to come.
Yeah. The saying in financial markets is usually sell in May and go away, and typically we'll get a rebound somewhere, as summer nears end. Is that pretty typical for the precious metals markets as well?
Yeah, I think so. It's not a perfect science, and it's not every single year. I remember 2016 was quite a different year, where we started, January of 2016 at $14 silver, and by July we're at $20 silver. So it obviously wasn't the same as it is right now. But we had $30 silver just recently, not that many months ago, and now we're at 25 silver. It's still reasonable silver price for a mining company. Like, I run First Majestic Silver, as many people know. First Mining Gold is not in production, so they're not as affected by the gold price. Their stock price might be affected by the gold price, but their revenues obviously aren't affected because they don't have revenues. But at $25 silver and almost $1,800 gold, these are decent prices, for the mining sector.
Yeah. As the leader of a silver company, I want to get your thoughts on the silver price as well. I don't know if you've been following the silver squeeze saga, what's been going on with Wall Street Silver and that. I just got off of doing an interview with them earlier today. And it seems to me as though a lot of what is happening in the silver market, you see a lot of retail demand. We've got the premiums blowing out on the retail product. Do you think that is, from your view of producing silver, do you think that that's also affecting the industrial side of that market, or do you think it's limited to retail?
I think it's made the industrial side nervous, for sure. I will going to First Majestic, because you're asking me about silver. So, and yes, I do follow it very closely. Our stock was one of the stocks that was chosen by the whole Reddit crowd. The share price hit, I think, over $30 that intraday, that one day when things went a little bit crazy. And but what it's done is brought a whole brand new buyer into this market that wasn't there before. You have this millennial crowd that didn't know anything about gold or didn't know anything about silver, and all of a sudden now, with this whole new Green Deal and the whole printing of money that's continually going on, and the millennial crowd, obviously is seeing what the big banks are doing, and how much money that's been made, in a very a small group of people. The concentration of wealth that's been occurring over the last year, I think is upsetting a lot of people. And, this is, the birth of this whole new millennial group, and we call them Reddit or Wall Street Silver. They come under different names, of course, but, Robinhood is another one. But, the industrial guys, they're pretty well taken care of, right? So, the Sonys, the Teslas, Panasonics, BMWs of the world, the big banks know, how much metal they're going to consume, whether it's, gold or copper or silver, they kind of know, right? And So if you're, Sony, you're going to put your order into JP Morgan or HSBC or whoever you're dealing with and say, hey, well, I want, 50 million ounces of silver delivered to these variety of ports around the world so we can produce our gadgets, and they sign a contract, and that metal shows up over that year. So that bank goes out to the miners and ties up a bunch of the supplies they can, or at least does the deals to fill that demand. And they're good at it. They'll also they manage the price of the metal as well. They go into the futures markets and try to manage the price so that these forward sales that they're doing to the big consumers, they don't get offside on those trades. So it's really very much in their vested interest to kind of keep some stability in the market, so they don't get offside. And then lo and behold, you have this new whole group of people, the retail buyer, coming into this market, screwing up their game, and it wasn't really expected. And I think they're panicking. I think that some of the action that we've seen of late, this invisible hand at $28 silver and $1,900 gold, it's just like every single time both metals hit those kind of magic numbers, they would get slammed, and you just think, oh, geez, like this doesn't really look natural, right? Because a natural market wouldn't act like that, right? And so there's something going on behind the scenes.
Yeah, we covered a lot of the COMEX for a long time. I'm a former auditor, so I like to dig into numbers. And we go over the COMEX reports over and over again. We're having heavy delivery on silver and gold the last few years, higher than we typically have had the previous 10. And yet the prices seem to get slammed down. Like you said earlier this week, both of them got slammed down quite a bit. Is it, is there an issue with the derivatives complex and how it's pricing the metals? And if so, do you think that there's any resolution to that?
Yes, there's an issue, for sure. And that's what, unfortunately, but it's not just the precious metals markets. I think it's all markets. Like, look at all the lawsuits that have been against JP Morgan, for example. Just reading an article yesterday that, they've admitted to 6 criminal charges in the last, I think, decade or something. Or maybe it was even less than 10 years, but still, this is one of the biggest banks in the world, getting charged with criminal activity trading markets, and it doesn't matter if it's interest rates or the bond market or stocks or metals. It seems like these banks just they just do what they do to make money, and making a profit is more important than anything. And breaking the odd rule here and there, I guess, if they get caught and get fined, I guess, that they can pay for it because they've just made so much money, and, manipulating silver the way they've done, and gold prices the way they've done over the last, several years. And, they're just, when you can print, an unlimited amount of paper to hold a price in a certain range, and the regulators just sit aside and let the banks just write as much paper as possibly they can without any financial repercussions, the game is fixed, right? Is there a solution? Well, as a miner, I've said to other mining companies, we should try to form a consortium, similar to OPEC, and price the metals according to what we want to price them at, and so that the mining sector can make a reasonable profit on a consistent basis, so that because the problem we have now, quite frankly, is supply. This whole new Green Deal is going to require a lot of metal, and there's just not enough metal being produced to do the things that the government wants to do by re-electrifying the planet in different ways. And it's a crazy situation. So I'm very bullish on prices, and I think oil, copper, gold, silver, you name it. I think everything's going higher.
Yeah, I agree with you. And I think one of the antidotes for that, at least for savers, or some protection for that, is owning gold. And you started a gold company called First Gold. Can you explain a little bit about First Gold and why people are talking about it? I know that you have a project there that looks like it has a really big potential payoff for investors.
Yeah, everyone knows me, for being a silver guy, and I put First Majestic together. She's almost 19 years ago now, and been the CEO of that ever since inception. And 2014 came around, 2015 came around, and I just was looking at these gold equities, these gold juniors, and I was shocked how cheap they were. These stocks were down like 90% in some cases, and even more. So I put this company together called First Mining Gold, and we ended up going out and buying or merging with 8 other companies, and ended up with a decent portfolio of pretty exciting gold projects, mostly in Ontario and some in Quebec and one in Newfoundland. But so I promised investors at the time, when I put that company together, that if we did ever do any transactions, like selling assets or JVing assets, we would try to dividend out, some, equity or cash or whatever. So we've done a deal. One of the projects is called Goldland, and it's got a couple of million ounces of gold in it. And it's side by side with another company, a project called Goliath. Actually, the borders are touching, so and it's owned by a company called Treasury Metals. Treasury Metals was trying to buy Goldland, but I was able to scoop it on them and ended up buying it for First Mining. But so we've, ever since we bought it back in 2015, and we've been in discussions with Treasury Metals on merging these 2 projects together into a single asset, because they should have been together to begin with. Goliath has about 1 million ounces of gold. Goldland's got a couple of million ounces of gold. Goliath is more advanced. They've got permits. So we just figured, okay, well, this is going to really fast track Goldland to production, and we decided to sell Goldland to Treasury Metals for a bunch of stock. So we're keeping, First Mining Gold's keeping 20 million shares. We got 43 million. We're dividending out to shareholders of First Mining Gold 23 million of these Treasury Metal shares, plus warrants as well. So there's actually about 11 million warrants. So every shareholder of First Mining Gold is going to get this free share in their account, in mid-July. And it's just automatic. So it's pretty exciting.
So when do you have to be a shareholder by Keith to take advantage of that?
Yeah, right. You can, if you're a shareholder today, great. If you're not, you've got a couple of weeks. It goes to shareholder vote. I think it's the 28th of June, I believe, or 30th. But yeah, it's going to be voted in favor. Like, why would anyone not vote for it? Of course, I'm going to be voting in favor of it as a significant shareholder of First Mining. So I'm going to get my free Treasury Metals stock delivered into my account sometime in mid-July. So you have to own the stock between now and the dividend date, which is as I said, mid-July.
Okay. I want to talk about the flagship project you have in First Mining Gold called Springpole. I wanted to bring up in your presentation the PFS results. I wonder if you would talk a little bit about the value proposition that Springpole brings you and why people should be excited about it.
Yeah, well, I'm glad you brought that up, because despite the fact we're dividending out these Treasury Metal shares to shareholders, we have a portfolio of really exciting assets. The one that you're showing right now is called Springpole, and it's our largest project in the portfolio. But you see the net present value there of just shy of $1 billion. And this is at $1,350 or probably $1,600 gold and $20 silver. Obviously, we're higher than those current prices. So, the NPV's, north of $1 billion, and on a pre-tax basis, you can see it's even higher. So it's in the market cap of First Mining Gold is around 200 million. So in one asset, this one asset's worth 5 times more than the market cap of the entire company. And First Mining Gold has a whole portfolio of other assets as well. It's got over $40 million in the bank. It's got $120 million in marketable securities in its portfolio. So it's very well financed. When I took the company public back in April of 2015, it went on quite the ride. By mid 2016, the stock actually hit a market cap of $600 million, and today it's $200 million. And I can tell you the company is in much better shape today than it was when the stock was, 3 or 4 or 5 times higher than where it is trading today.
Yeah. So you have a good cash position. Like you said, you have a project that's worth about 5 times what you're currently trading at. Assume that it's undervalued. What do you think is going to be the catalyst to take it forward? Are you guys doing some additional exploration work? Are you going to put out a new study?
Yeah, Robert. Thanks, Robert, for asking that, because one thing I think is always a bit of a problem when you have a broad portfolio of assets like First Mining Gold does, is that it gets confusing to investors. They go, what are you guys doing? What are you? And we're going to be drilling, and I think that's going to be a big catalyst. We're going to start drilling Springpole, because currently it's got 5 million ounces of gold. But we think technically from our internal technical people think that there's a lot more gold there than what's currently been discovered to date. So there's a ton of exploration upside there. We're also going to be drilling another project called Cameron, which is also in Ontario, and we're just in the stages of planning that. We also have some joint venture partners on a couple of other projects, like the Pickle Crow project, which is currently being drilled by a partner of ours. And we've also just done a deal on a Newfoundland project called Hope Brook. Then we're getting quite a large stock position in that company, and they're going to hopefully start drilling sometime this year. I haven't got a timeline on when they're going to be drilling. So there'll be lots of news coming out, on the entire portfolio.
So are you and First Majestic invested into First Mining Gold as well?
We are. First Majestic actually seeded the business with me. So when I first did seed financing back in 2014, we put some money into First Mining Gold. We also sold some assets to First Mining Gold, some non-core assets, which they've now turned around and sold to somebody else. But nevertheless, we do own a significant position in First Mining Gold. So we'll get our treasury metal shares as well.
Okay. Do you have other institutional investors invested in First Mining Gold as well?
Not compared to First Majestic. It's a relatively, I shouldn't say new company, but it's at that stage where you're not an exploration company, and you're not a producer. You're caught in the middle. And if you look at the way stocks trade, people love to get drill results, and stocks move on drill results. That's one of the reasons why we're going to be focusing on drilling this year, because it's something we haven't done for a while. And so we're going to start we're actually putting a team together right now of individuals who will be monitoring or managing our entire drill programs over the portfolio. But then you've got this development stage company, which is in permitting, which First Mining is trying to permit the Springpole. And that's kind of your most boring stage. And that's where, investors just kind of get tired and, go on to something else. And but the second you get your permit, then all of a sudden, boom, the stocks generally start to move, and then you break ground and start building the mill, and that's a different cycle. So it's caught in a little bit into that, boring phase. But people are, Springpole is just such a big asset, and we have to focus on it, of course.
Yeah, I think a lot of analysts, I see reports from 3 different analysts. You have COMEX, Cantor Canada, and HC Wainwright, and they all have much higher projected share prices for you guys. So I think the analysts know that you guys are undervalued and have a lot of room to run. And we're not even talking about a rising gold environment. We're just talking about, like you said, at 1,600 gold. So I think the people in the market know it, but it's just a matter of letting people know what you guys have and keeping that interest, in the company so that people are aware. Beyond that, what is your outlook for gold? And do you think that rising price of gold, if you think it's going to rise, it's going to change things for you when you get closer to, to having that final feasibility study as well?
Well, the gold price, always helps stock prices. So if we get to the gold prices, I think we're going to get to north of $3,000 gold, then that's going to be very good for the entire sector. And First Mining Gold, of course, would react quite nicely to a move in gold to that magnitude. But Springpole, which is the biggest asset that we were just talking about, doesn't need $3,000 gold. We did the original economic study at $1,200 gold, and then we did another one at $1,300 gold, and we did recent ones done at $1,600 gold. But it's profitable at $1,200 gold, so it can withstand much lower gold prices, which I don't expect we're going to see. But this is a highly or will be a highly economic asset.
Yeah, highly economic, and any rise in the gold price goes straight to the bottom line, essentially, because you guys are in a positive position from a all-in sustaining cost, mining cost position, right?
That's exactly right, and that's what's beautiful about the miners. So, the leverage that mining companies have, because your fixed costs generally don't move much, right? Maybe there's inflation and maybe there's some wage increases, but usually what happens in a bull market is the metals far exceed any kinds of cost creep that comes in, and so the majority of that extra revenue just drops right to the bottom line, as you said.
Okay. Any other last thoughts on First Mining Gold that you have for us today, Keith, that we haven't covered?
Yeah, just look for drill programs to start. Look for some news coming out of our partners, regarding the Hope Brook project and the Pickle Crow project. There could be some other deals also in the making, but in my opinion, the stock is quite cheap. It's about a third or a quarter, actually about a quarter of what it was a few years ago. And with this spin out coming from Treasury Metals, the Treasury Metals trades around 90 cents a share, and if you own 1,000 shares of First Majestic, or pardon me, First Mining Gold, it's about a 10% dividend equivalency. And I say about because you have to go to the calculator, and on the date of distribution, which let's say for argument's sake is July 15th, that calculation will be done that day. So the exact amount of shares that there's going to be landing in people's stockbroker accounts will be calculated at that moment in time. But you can, just to estimate, you can go to First Mining Gold's website, and if you own 1,000 shares of First Mining or 10,000 shares of First Mining, you can type in your holding, and it'll spit out the number of Treasury Metal shares and warrants you're going to get as well. Because you get warrants, which we should have mentioned. These warrants are $1.50 warrants, and they're good for a couple of years. So you get the shares.
Yeah, the warrant is basically a bonus right on top of it. It's an extra incentive. And it's not typically available to a lot of investors unless you're doing private placement deals. So that's a nice little bonus that you guys are giving.
Yeah, we thought it was nice, and it's kind of a promise. What I told you earlier, but we promised that we're going to do something like this, and it's just it's great to see that we're able to do it.
Yeah. Well, Keith, thank you so much for joining the program. We appreciate it. This is a stock we've been covering for a while. We did our first review of it a couple of months ago. I think you are undervalued. I think everything you said is true. I think this is one that our viewers should take a look at and consider for their portfolio, because I think when you guys get closer to producing, your price is going to continue to rise. That's the Lassonde curve for mining stocks. But you'll also have that upside of the gold price as well. And we've been saying we think gold price is very bullish in the next few years as well. So thank you so much for joining the program.
Yeah, great, Robert. And people should go to the website, just firstmininggold.com, and look at the PowerPoint presentation. Do your own due diligence and so on and so forth. But there's a lot of good information on the website.
All right, great. Thank you so much, Keith.
Great. Thanks, Robert.
Hey, everybody, this is Rob with goldsilverpros.com, and I wanted to bring you a very special message from our newest sponsor, that is Kinesis. And the reason we brought Kinesis on to be part of the program is because we fully believe in their mission. Their mission is to have a token that you can trade online that is backed by something of real value. That would be gold or silver. And they also offer a trading platform which allows you to trade through various cryptos and fiat currencies. The great thing about Kinesis is, for those of you that want to store gold or silver, but also have access to it and actually do transactions with it, they allow you to do that. So it's a better option than just flat out storing it and then having to fly somewhere and take it out when you need it. You have the ability to use it right on their platform. You can send it to other users. They have a debit card for US residents as well, and they have a full exchange, which enables trading of Kinesis currencies for fiat and cryptocurrencies if you want to trade in and out. So lots of ways to get into the Kinesis tokens, the KAU and KAG, that are backed by the precious metals, and also to get out of them and to trade in other things if you want. So there's not this laborious process of getting your gold and silver out of the system. And again, they have a Visa card for US residents, and you can trade these currencies with other Kinesis users, the KAU and KAG, sorry. And so they also have a wallet. So it's a lot like having some of the other currencies you may be used to, cryptocurrency, except for the fact that it's backed. And that's why we wanted to have them on the program. I like the fact that this is backed with something that I trust, that has 6,000 years of monetary history, that is gold and silver, and something that also allows you to interact with the normal everyday financial system as well if you need to get your value in and out. A lot of benefits to using Kinesis. Wanted to share that with you guys. We're so happy to have them sponsoring the program. Look forward to more on Kinesis from us. We are going to do a special profile on Kinesis coming up during the month of June. Stay tuned to that. I'm going to walk through all the benefits of the Kinesis tokens versus other types of currencies, fiat and cryptocurrencies, and give you a full-on review of what I think about Kinesis and what I think the value add is. Stay tuned for that. There'll be a very special video coming up not too long from now.